Did you know that your emotions can play a significant role in your investing success? In fact, research has shown that emotional decision-making can lead to costly mistakes and lower returns. As investors, we all want to make smart decisions that lead to better returns. But did you know that our emotions can get in the way of our success? That's right. Fear, greed, and other emotions can lead us to make irrational decisions, causing us to miss out on opportunities or make costly mistakes. But don't worry, in this video, we'll show you how to master your emotions and achieve better returns. Welcome to Investment Channel and today's video, where we'll be diving into the fascinating world of investment psychology, the role of emotions in investing. As human beings, we're wired to experience emotions, and investing is no exception. In fact, emotions can play a significant role in how we approach investing, from the initial decision to invest to the ongoing management of our portfolios. Fear, greed, and overconfidence are just a few of the emotions that can impact our investing decisions. For example, fear of losing money may lead to overly conservative investments, while greed may lead to taking unnecessary risks. Overconfidence can also be a problem, leading investors to believe they know more than they do or underestimating the risks involved. The impact of emotional decision-making. Emotional decision-making can have a significant impact on investment returns. According to a study by Dalbar, Inc., the average investor significantly underperformed the S&P 500 over a 20-year period, in large part due to emotional decision-making. Developing emotional intelligence. To master your emotions while investing, you need to develop emotional intelligence, which is the ability to recognize and manage your own emotions as well as understand and empathize with the emotions of others. Emotional intelligence involves self-awareness, self-regulation, motivation, empathy, and social skills. The importance of mindset. Your mindset can also play a critical role in your investing success. A growth mindset, which is the belief that your abilities and intelligence can be developed through hard work and dedication, can help you approach investing with a more optimistic and open mindset. On the other hand, a fixed mindset, which is the belief that your abilities and intelligence are fixed and unchangeable, can lead to a more closed and fearful approach to investing. Techniques for mastering your emotions. There are a number of techniques you can use to master your emotions while investing. One is to develop a routine for making investment decisions, such as setting aside a specific time each week to review your portfolio and make any necessary adjustments. This can help you approach your investments more objectively and reduce the impact of short-term market fluctuations on your emotions. Another technique is to practice mindfulness and meditation, which can help you develop greater self-awareness and emotional intelligence. The benefits of emotional mastery. The benefits of mastering your emotions while investing are numerous. By learning to recognize and manage your emotions, you can make more informed and rational investment decisions, avoid costly mistakes, and achieve better returns over time. Additionally, emotional mastery can lead to a greater sense of confidence and satisfaction in your investing journey. Conclusion. The psychology of investing is an essential component of investing success. Emotions can impact our investment decisions in significant ways, leading to costly mistakes and lower returns. However, by developing emotional intelligence, adopting a growth mindset, and using techniques such as routine, mindfulness, and seeking support and guidance, you can master your emotions and achieve better returns over time. Don't forget to subscribe to this channel, like and share this video, and leave a comment below if you have any questions. Thank you for watching, and I'll see you at the next one.